Listen to me, because this is about your security and the money you worked your whole life to save. You've done the right thing. You saved, you invested, and now you're looking at retirement. But there is a hidden trap waiting for you, and it's called IRMAA. That stands for the income-related monthly adjustment amount, but I want you to just think of it as a massive, unnecessary surcharge on your Medicare premiums. Most people think their Medicare costs are fixed, but they aren't. If you make $1 over a specific limit, the government reaches into your pocket and demands hundreds of dollars more every single month. It is a cliff, and if you fall off it, there is no "oops, I didn't know." You pay. And you pay because you didn't have a plan. The fear I hear from so many of you is that your expenses in retirement are going up while your control over your income is going down. You're worried that those required minimum distributions from your 401k or traditional IRA are going to push you into a higher bracket. And you are right to be worried. If you haven't planned for the tax torpedo, you could be hit with higher taxes and higher Medicare premiums simultaneously. Imagine seeing your Social Security check get smaller because the Medicare deduction grew by $200 or $400 a month just because you sold some stock or took a big withdrawal. That is not how you enjoy your golden years. That is living in fear of your own success. So, how do we fix this? How do we stop the bleeding before it starts? The first thing you must understand is the 2-year look-back rule. Medicare looks at your tax return from 2 years ago to determine your premiums today. If you are retiring in 2026, they are looking at your 2024 tax return. This is why you cannot wait until you are 65 to start thinking about this. You have to be proactive. One of the most powerful moves you can make right now is the Roth conversion. I have told you for years, I love the Roth. Why? Because distributions from a Roth IRA are not included in the calculation for IRMAA. If you have a massive traditional IRA, you are sitting on a tax time bomb. Every time you take money out to live, Medicare sees it as income. But if you systematically convert that money to a Roth now, paying the taxes today while rates are potentially lower, that money becomes invisible to Medicare later. You are trading a certain tax today for total freedom and lower premiums tomorrow. But what if you're already in retirement and you're a generous soul? Use the Qualified Charitable Distribution, or QCD. If you are 70 and a half or older, you can send up to $105,000 directly from your IRA to a qualified charity. This money never touches your 1040. It doesn't count as adjusted gross income. It satisfies your RMD without ever triggering that Medicare surcharge. It is a win-win. You help because you love, and you keep your money out of the government's hands. Now, let's talk about those of you who just retired and saw your income drop. Maybe 2 years ago you were a high earner, but today you're living on a fixed budget. You do not have to just sit there and take the surcharge. You must file Form SSA-44. This is your life-changing event form. If you retired, got divorced, or lost income-producing property, you can tell Social Security, "Hey, my life is different now than it was 2 years ago." Don't let them charge you based on a life you no longer lead. Stand up for yourself and file that paperwork. Your actionable takeaway is this: look at your modified adjusted gross income today. Don't wait for a letter in the mail. If you are nearing those brackets, which often start around $103,000 for individuals or $206,000 for couples, start shifting your assets. Use health savings accounts to pay for medical expenses with tax-free money. Manage the timing of your capital gains. If you need to sell a stock for a big profit, maybe you don't do it all in 1 year. Spread it out. You have to be the master of your own financial destiny. Don't let a lack of planning turn your hard-earned retirement into a series of penalties and surcharges. Get smart, get proactive, and keep your money where it belongs, with you. Thanks for watching, see you in my next video, and don't forget to like and subscribe.